Welcome guys, welcome to another video. Today we're talking about the ADA US dollar pair, and as always we start on a monthly chart, a quick overview, what happened, what can we expect, and yeah, let's not waste time, let's dive in. So ADA broke out of this falling wedge pattern here. In my previous video I mentioned the possibility that we could come down for a final test here after closing this July monthly candle, and this is exactly what we saw. We had a little retest here and yeah, bounced off the 68 cents mark, and since then we are on our way up here, and the next target will be the 23.6 retracement level at 94 cents. It will be this wick high here, and I don't really expect much resistance here. It shouldn't be a big rejection, it should be a small reaction, and before we test this area here where we closed a monthly candle in November last year. We also have this wick high here from December last year, which is in line with the 38.2 retracement level at $1.35. Right, so yeah, expect a reaction here, expect maybe even a rejection here at around $1, because it is a psychological mark. It is our local high here on the monthly chart, and it shouldn't be too easy to get through, but I think in the end we will yeah, to proceed testing this 38.2 retracement level. So if you watched my previous videos, you should know that I am tracking this nested impulse sequence, and I'm getting more and more convinced that we are actually here in a very early stage of this wave 3, because this wave 2 bottom is likely in. I mean, we did almost a triple bottom here. It looks like a triple bottom. If you want me to dissect this on the lower time frames, watch my first ADA video here on this channel, and yeah, you see that the bottom, it should be in structure wise, and we also have this breakout now out of this wedge. It is supported by volume, it is supported by momentum, and also on the ADA Bitcoin chart you can see a bottom formation, and ADA, yeah, gaining strength against Bitcoin, right? So I think we are primed for higher, and it just makes it very likely for this wave 2 to be in. And if the wave 2 is in, logically we are in wave 3, so it should be this early wave 3. So again, 5 waves to build this wave 3, and within this sequence of 5 waves, this third wave here, right, within the third wave, it should be the most parabolic move of this whole sequence, and yeah, we are waiting for that move. So but it's not clear yet if this wave 3 here started, because we don't know if this wave 1 is already in. It could be in, right? Sometimes this wave 1 closes above the previous wave 1 high, sometimes below. We don't have enough information yet to determine if this wave 3 is started. Now let's talk price targets real quick. How far can this wave 3 realistically go? So the most common target for a wave 3 of that type, right, within a nested structure, is the 200% retracement extension level, right? How was it measured? You took this low here, you take this high, and then you take this low here, right? And it gives you extension levels. And for this wave 3, the most realistic target area is between $2 and $2.60. Right, most of the time it does terminate at 200% extension level at $2.60. Right, and it would make sense. It is almost in line with the 78.6 retracement level at $2.50. Right, we're always looking for overlap between the extension levels and the retracement levels, and this wave 3 here, it should hit the $2 area. and on the way up, right? Once we have more wave structure, more information, it will reveal itself, it will reveal targets, and the calculations will get more precise with time. So there is another scenario, slightly less bullish, that I quickly want to show you. The main difference is the end target, right, is just not as high. In the short to mid-term, it is also very bullish. We have this final 5 waves to the upside, 1, 2, 3, 4, 5. Right, you have 1, 2, 3, 4, 5 correction. Then not very good visible because it was so much hype here in this wave. But you also have an impulse here into the third wave, again correction, and now you expect another impulsive sequence, 5 waves to the upside. But when we make this top here, we go into something more bearish, right? We couldn't make a new high, and we continue the overall downtrend. Let's not forget the 4-hour time frame. And yeah, we are still tracking this impulse here, a first wave to the upside with a beautiful nested impulse, then this correction, and yeah, potentially finished now. Let's dissect the correction here. So in the previous video, I speculated that this could be a complex structure, and this is exactly what we saw. We have an ABC for W, whatever correction in X, another ABC to finish off this corrective structure here in Y. So, but what is more important than the looks and the structure is actually what levels we hit, right? And the 100% extension level is exactly what you want to see. It just means this wave, right, and this wave, they have the same length, and it is in line with the golden pocket. And if we look at the most common area for a wave 2 to finish, it is between the 50% retracement level and the golden pocket. So we hit all the levels that we should hit, and we had a bullish reaction afterwards, breaking out of this falling wedge here, and now showing more strength. And yeah, it looks like it wants to keep going to the upside. So we are looking for an impulse here to continue the trend, right? We want impulsivity like we had this here in the first wave, and yeah, for that we need 5 waves, and for now we have 3 waves, which in which the third wave is pretty much elongated. So if we measure the wave size, then this third wave here is almost 2 times the size of the first wave, which is a very untypical for an ABC, for a corrective structure that we need for a more bearish outcome, right? So currently the structure of this move speaks against a corrective move here, right? For a correction within a higher correction. It just doesn't look like it, but we have to keep our eyes on that, and yeah, to keep tracking it. But for now, it looks good. But let's dive into a more bearish scenario. Let's say we get that more prolonged correction here for a wave 2. Then it should reject here, right? Once we take this level here, we are likely going to retest this high, and we're likely going to take this high, considered all things. So if it is, if this is just a fake move to the upside, which also Bitcoin is not hinting right now, looks rather bullish, but if it is, right, I mean, the market can do everything, we would likely visit here this golden pocket again, and if it's a deeper move, we could even go into the 786 to test the lower 60 cents area, right? So this is something that we should keep in the back of our minds. Last but not least, we have the Cardano Bitcoin chart, and yeah, history. It looks like history is repeating here, right? This is the last cycle, and we made the bottom here, initially broke out, crossed the 51 SMA, couldn't keep the strength, coming back down, testing the 886, retesting this bottom here, and then we took off. And before that, we have a bullish cross on the bull market support band. Here again, we have a bottom, an initial breakout, breaking the 51 SMA, coming down again, couldn't hold the strength, and then bouncing off of the 886. And now we again have the bullish cross on the bull market support band. So the 51 SMA is also kind of bottoming out and now starting to slope to the upside. So the next step would be to take this 51 SMA and then actually starting to outperform Bitcoin, hopefully for the rest of the cycle. So thank you for your time, and I hope that you liked it, that it was useful to you. If it was, please leave me a like and maybe comment if you have any suggestions, or if you just want to create some hype around ADA, share it with your friends, repost it, whatever. And subscribe if you haven't already for new content, and see you in the next one.